this is silver on the weekly scale. In the past week, silver made it very clear where it wants to go. If you haven't been listening, then you are very likely to listen in the future, as silver, in my opinion, does not intend to let go of this bull that it caught, and silver is going to come back, even if you're going to get some pulls now, which I suspect we're going to experience some slight pause here. That will be very natural and very normal in the circumstances here. As you look at the weekly scale and you see this big stick coming up, which is a 1 2 1 2, which is very very likely a 3 of 3. Okay, you see where it is heading. It just got stuck here in a massive overhead resistance, massive. Now it does not mean that this is not possible, meaning an immediate surge, continuous surge. Of course it's possible, anything is possible. But what I think is more likely is that we are going to experience now some sideways price action. As I told you already, we are only 8 trading days from the decision of the Fed. And this decision to cut rates or not, or cut by how much, etc., is going to be so impactful on the precious metals and of course on the currencies in general. And it appears to me, this is, remember, weekly scale, it appears to me that we could work with the idea that we have a 1-2 behind us with 2 weeks of correction here. And if we have 8 days or so, we could fit here another correction that could relate to my 1-2 here, in which case that's going to be our 1-2-3. Okay, if that's the case, we are in a 1-2-3. Then once the fourth wave is done on the blue scale, we're going to go for another shot that is almost certainly going to shoot silver to run 18. Okay, that remains 1-2, looking very good. And I'm going to go now to the daily. So I repeat, 1-2, that is taken as 1-2, and the surge here, one reading would say the third wave is done. The other reading would say no, the breakdown of the movement going up is supporting a possible 1-2-3. Okay, you see this red, so that means we are going now for a relatively brief correction and then another push higher before we slide back to the fourth wave on the blue scale. I tend to think that in fact the blue scale is the one that is to be applied here currently, is my favorite. I think we are in a 1-2-3. There is another alternative that we are in a 1-2, and this is a movement that really ended, but what we're going to have now is another 1-2. It's not out of question, but it's just carrying it to an extreme, you know, in terms of interpretation. It could be quite an extreme interpretation, and I generally like to go with more conservative estimates because you know, to get that extreme movement by its nature is not very common, and if it comes then you're a bull, fine, great, you know. I suppose you have some investments there that you let run, and some hopefully you trade short term, so you take advantage of small fluctuations. It's all a factor of your time, if you have the time to do that. This is the 60 minutes, so you can see clearly the idea. If this is a 1-2, that could work as a 3-4, and that's a 1-2-3-4-5, which is an extended fifth. Okay, so the third wave is not the shortest. That would call for a correction naturally, and I do think that the reversal on Friday and the inability to bounce back during the session back to the previous high right here, I think it is opening the gate for slightly further decline. We're not talking about that, of course, but slightly further decline to put meat, if you like, on that idea that we are in a fourth wave on the blue scale. But overall, the performance this past week, of course, is spectacular when it comes to the awakening up of silver. And if you are in for the long term, don't worry about this fluctuation here. The 8 trading days will pass quickly, and in my opinion, this is likely to continue higher in full force. Okay, that's gold. That's the daily. And I think also there is a case here for correction in gold. In fact, I want you to pay attention to what happened to the MACD when it shot up above the previous high here. Look, the MACD was not extremely enthusiastic. That means that the shot that we got above the previous high here should not be taken as the beginning of an impulse wave, but rather should be taken as part of a correction. And yes, there is a structure that would support this. If you start counting from here, you would have a 1, 2, 3, 4, 5, and first leg would terminate here, which means that what you see here is correcting the entire move right from the bottom here. And that's why, yes, the MACD is not showing you a very healthy follow-up here to the jump. It's rather, in fact, showing you divergence. Do you see? It's showing you divergence, and that's not exactly what you want when an impulse wave is starting. You want exactly the opposite, meaning you want a divergence on our side rather than against us. This is a divergence against the bulls short term. This is the daily. I'm going to go to the, let's take 120 minutes. And I suspect that given that gold sank like that, it killed my short-term interpretation for a possible impulse wave, a 1, 2, 3, by sinking through this level. So that's dead. That is unlikely to materialize now. It's in fact not possible the way you see it here. This is not a 1, 2, 3, 4. What could still happen? Of course, anything could happen, and gold is not going to listen to my interpretation of the MACD, and it's just going to shoot higher. In that case, this is very likely continuation of an impulse wave, and we're going to do this. Do you see? That's going to be a 1, 2, and that's going to be a third wave running up. And it will call for reassessment, of course, of the interpretation that I'm going to apply to right now. My thinking is that the previous move ended here, and this is what you see in front of you with bunch of ABCs, etc. All of this is corrective, and it is a very strong correction, meaning it's a correction that says that the trend higher is very strong. Why? How can I see that? Well, I'll show you something here. It's called running up correction. You have 5 waves run. Great. If I read it right, it started here and it terminated here. Okay, so we got the 5 waves run, and then naturally we're looking for a correction. Now, normally a correction will go back to the 4th wave level, which in our case it should go back to this level, to roughly 1350. Yeah, if this interpretation is correct. But when you have a market that is very, very strong, meaning the bull is very strong and there is a lot of buying power, the market will not go down that low. The market will do something like that. And this is the correction. But that's going to be your A, that's going to be your B. When the B gets underway, it actually exceeds the previous high. But it's not going to go very far because it's not an impulse wave. So it's going to come down, and normally it doesn't come down all the way back to the classic level of the previous 4th wave, because the forces that pushed it through the previous high are going to jump back in and buy when it comes down. So that is a running up correction, and I suspect that this is quite possible what is unfolding here. I think that we are going to work with the assumption that that's an A and that's a B, and it's full of complex possible interpretations here. My point is that if we see gold going down in the next several trading days, and remember we have 8 days to the decision of the Fed, that is, in my opinion, 99.9% certain is going to shake out a lot of markets. And the interpretation I'm working on right now, and we will quickly find out if it's correct or not, is that gold is going to come down in anticipation of a decision for a rate cut by the Fed in 8 trading days. So the gold is going to come down. It's going to come, let's say, to 1,380, 1,370. As I said, I don't think it's going to make it that much lower. Don't forget that we have massive support at this level where you see the mauve line. Yes, that's the breakout spot. Yeah, breakout level. So if gold is coming down here, is creating either an ABC or a 5-wave run, that's perfect. What I think is the likely scenario is that if it comes down around here, that's going to be a golden opportunity to buy gold. Yeah, I don't know if we're going to be so lucky to get this opportunity, but if it does come down to retest this level and we get a rate cut, you know what's going to happen? It's going to fly like a rocket above this level. It's just going to go up, and we will have days of $40 or $50. Yeah, I think so. I do think so. We will have, if they cut rates, we are going to have days of $40 or $50. That's going to be a complete earthquake. Here we go. This is now the weekly, and if it's coming down to correct again the breakout level, it's no big deal. In the big scheme of things, it's perfectly okay. There is no reason to nullify the interpretation of the bull here. Yes, this is still looking okay. It's testing of a major breakout level. Okay, so that is my thinking currently concerning gold.